Hi guys, the engineer here. Today I want to talk about this. I've been having a lot of requests about how to use the Dynamic Roller Trading Hours Pro tool, and I will make this video to introduce the framework of time-based delivery and price-based delivery, and the reason why the indicator shows or plots the candles like this, and what is this diagram here for me. This is for me personally. Okay, when I was introduced to ICT concepts, the first thing that I heard was the relevance or importance about time-based models, time-based entries, time-based delivery. And when I understood that, it was better for me. I improved my understanding, but it's not complete. And I don't own like enigma or a secret sequence about time and when it's going to price consolidate and when it's going to expand, like every single swing, and anticipate every candle. I personally think that that's almost impossible to know personally, but there are a big difference between smart money and uninformed money. Even as an ICT trader, I believe that 100% most of the trading community belongs to an uninformed money. And this is not something like to brag, like say I'm better, or anybody who trades like this way is better. Obviously not. I believe that you can make a lot of money in the markets having a really basic, solid model. But when I understood this specific thing that I'm going to talk about, my trading improved a lot. Okay, so let's begin. So basically, there are two ways to deliver price. One is price-based delivery, and the other one is time-based delivery. What's the difference? Okay, I don't know if you saw the one setup for life video. It's like the core, the foundation of the roller trading hours trading, and it's just barely a little introduction to roller trading hours gap, the liquidity from AM session, launch session, PM session, and different models that ICT introduced in 2023. So that was like the introduction, obviously, but I found really interesting stuff when I was studying that mentorship, the 2023, and I basically find out that every day we are referencing to the previous daily range, but only to regular trading hours. Okay, so for me personally, this is how I see it. What is price being delivered on a price based? This is price based delivery. Okay, you have on this chart, I'm using my tool, but I'm not showing the gaps. I'm showing only the electronic trading hours and the regular trading hours candles. So all these range from here are the candles that were printed outside of this regular trading hours, basically. Okay, why we have this specific option for the tool? Because it helps me to see what the overnight price action did. So it's really obvious, and you don't need to start to switch to one chart to another to highlight the gap or to see the overnight price action. I like this a lot. And so this has been delivered on a price based, but not in time. So what does it mean? Basically, when you are trading outside of the regular trading hours and you see that the algorithm is respecting, I don't know, any PD array, it should work and respect this, but it's not enough. This PD array or this imbalance must be traded on regular trading hours. 100%. We should come back again to this specific range on this time-based delivery. When we are trading in regular trading hours, we are trading in a time and price-based delivery. Okay, so everybody, when they are seeing this, they are anticipating that price should move lower because London made the high of the day and we have a market structure shift. But and the next day when the market opens, we immediately retrace to regular trading hours range and PD arrays. You see, we have relative equal highs from overnight and buy side liquidity. I took this trade. You can see, you can watch this on my Twitter page. I took this long here, and it's exactly around here in the 1020 macro that I use. Okay, so this is huge for your trading, huge, something really powerful. Once you understand this, that we are basically trading regular trading hours PD arrays, and that's the reason why ICT is teaching the first presentation from the New York Open, the first imbalance of the day, because that's a really important point of reference for the market in the future will be realized many times. We should not consider PD arrays from this range when we are trading on the New York time windows. If you are trading pre-market hours, if you are trading London, you should consider all the PD arrays and all the chart completely, because they are using these complete PD arrays to build or engineer liquidity, and this PD array has been delivered on a price-based basis, not in time, because the stock market is not open on that specific time window. This is smart money. Smart money is trading or accumulating the orders from the uninformed money. It's not about the power of three or trading inside of the macros. When ICT, I personally think that is referring to time-based delivery. Is about this specific topic that I'm talking. 100% I believe that. And you can, I don't know if you have been studying his trades lately on this mentorship, but he's only trading basically regular trading hours chart and without even the electronic trading hours. I've seen that he's trading basically at this specific chart without the other one. So this is really important, really important. Nobody talks about this, okay? And you should consider this 100%. And it's better for you because you reduce the number of variables in your trading. Because imagine that you have to annotate every PD array of this specific day. Okay, so you have here, I don't know, stop rate, and you are annotating this as an order block, and you are anticipating here a change, a continuation move, because we are trading this order block here, and we didn't respect at all this PD array, nothing. So we were referring to this specific sell side liquidity on regular trading hours and this imbalance here. Okay, so how do you use this in your trading? I want you to notice something. How many times on this week, how many times we took the liquidity from overnight? How many? Okay, let's begin. This is Monday. Did we take the liquidity from the overnight? Yes. We use a PD array from previous regular trading hours day. Here. Boom, took this trade also. Okay. Monday, Tuesday, same PD array. Did we take the liquidity from overnight? Yes. $100 and almost 200 points. This day, Monday, 200 points. Okay, Wednesday. Did we trade against the overnight price action? Well, we have the sell side liquidity from overnight, basically. So we were trading to take this sell side. So basically we were trading against or mitigating at least the gap. I don't have the gap here. Repricing the gap here. This is, you see, we close the gap. Here, respecting the consequent encroachment of the regular trading hours gap here. So basically we close completely from, this was the closing price previous day, and we reach exactly the closing price here. Okay. This was Wednesday. Thursday, everybody was long, looking for longs here, and the market come back again to take the liquidity from the overnight. Again, uninformed money, uninformed traders, smart money. Friday, we didn't take the lows here, but we take the buy side from overnight here. And we have this order block here. So we were trading inside of this range. If you measure the high and the low of the previous regular trading hour range, we were trading, opening out almost at the upper quadrant of this range, 75% here, and we retrace almost to the equilibrium, but we find support on this, and I took the lock here, here, and took partials here and the gap, and I was stopped out at break even. So for the guys that they are asking me, how do I use that function of your tool like this? Basically, this is a tool for smart money. You have the gap that I will talk about, implied levels for premium discount, and how to use the standard deviations, and how do you position yourself premium or discount relative to this. And I have talked about this many times in many videos inside my Telegram and the past videos that other videos that I have in my channel. So this is how you have a better understanding about time-based delivery. That's the reason why first presentation is so powerful, because you are basically trading the first imbalance of the regular trading hour session. That's it. And I've been doing that since the 2023. Exactly the same. I'm only using PDRAs for regular trading hours. I don't trust any PDRA outside of this range once the market opens. This is important, because if you are trading outside of this time window, you should consider this chart also and read price like this. Okay, but do you see the difference between having a chart that helps you to identify what regular trading hours did and what overnight did? It's really different. At least for me, it's a complete different world. Okay. And you don't need like the 4-hour chart, the hourly chart, and to find key levels. If you are a day trader, you with this chart, the 15-minute chart, you basically can see every PDRA of the previous range, and this is something really simple to understand. At least this is what I think, and it will help you a lot to trade the New York Open. That's basically the best trades of the entire day. It's the better moves are born inside of this time window. You will find times like this specific day when we are creating a breakaway gap, and price is not going to come back to completely close the gap or to take the liquidity from the overnight, like on this specific day. But this is something that it's fine, because price is engineering liquidity and building sentiment for the next days. Okay, so like this, everybody was short this specific week, because we have a huge move, and we were expecting like a retracement and continue lower, but we are trading inside of this gap also, and we are finding support on the 50% of the gap. Basically, we reach a lower quadrant and we are respecting the 50% and the new week opening gap, the first gap of Monday, the regular 3 hours gap on Monday. Okay, you see, this is the new week opening gap on regular 3 hours. We didn't close below it, not a single time on regular 3 hours. We were respecting with bodies the lower quadrant the consequent encroachment, the lower quadrant, and we were using this specific range as an area of accumulation because fair value from the weekly chart is found in the opening of the weekly candle. So if you want to long close in proximity to this range. If you are trading the weekly range, if you are trading the daily range, you want to trade discount and you are bullish of the gap. Like this. This is Friday gap, today's gap, and you don't want to long be above the gap, and you don't want to short below. Okay, so if you want to buy, you want discount prices, and discount is found below the gap. So okay, now I understand that if I want to buy, I want cheap prices for my stock index market. So I know that price is going to refer to PDR raise of the previous daily range. So what do? I find PDR raise in the near the equilibrium or in discount of the previous range. If you are long, so we have what here? This PDR ray is in the equilibrium. So we extend this PDR ray to the next day and we wait to price to reach that specific, and we find, and if we are going to wait for a macro ideally. So I took this trade today at 10:20. We had this stop rate here, and I took the long here, and I took partials here, and I put my trade at break even. Once I took partials and I got stopped out at break even, but we retraced to this specific range, and at the end of the day we were moving higher. It was a choppy day. But do you see the framework? It's really simple. It's not hard. Many people are telling me this, that is, how do I use it? This is the way. This is a simple, powerful approach for your trading, and you are going to trade like smart money, because you know that PDR rates must be traded inside of regular trading hours in order to be time-based delivery, time and price delivery. PDR rates traded outside of this time window is being delivered on a price based, not in time. Okay, so I hope you find this insightful. This video is really powerful, believe me. Probably it's not going to make click at the first time that you see it, but if you want to improve your trading and you are struggling to find consistency in your approach and in your trading, you may want to study price like this. Okay, so this is everything for today, for this short video. The next week I will be talking about implied levels for premium and discount, and how to use the standard deviations and the another components of the tool to in your trading. Okay, so have a nice weekend, enjoy your family, and be thankful, because you are learning a really powerful skill that is going to change your life. Stay safe.